all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Three, 4, 5, 6.
7, 8. Okay.
Yes, everything worked. Hi, guys. Really, really good. Take it easy today on the job.
Oh, now you can hear me on the YouTube. So today, I'm going to repeat it. We have an interesting day because the ECB is about to raise its interest rate. Now, they still at 0.5% at the European Central Bank, which is nothing compared to the US 2.5, and the US 2.5% is nothing compared to what was in the 80s during the time of Paul Walker. So today, it seems like that the market is pricing in maybe a direct competition for the euro against the dollar, but if I look at the interest rate differential, the US is way ahead of the eurozone, which means that the interest rates are higher. Therefore, investors find better value in terms of the carry trade at the fixed income market in the US.
We need to dry a whole week.
Muted. And this is why it's important to see how the market is going to react. Now, I have my theory, which is not bulletproof, not 100%, may or may not work out. But in my thinking, the dollar is on the run. Definitely, it's one of the strongest currency now because it offers one of the highest interest rate in the current environment, and it's one of the safest investment right now. And Jay Powell is going to come out and speak for a reason later today at 3:15 European time. He will be very firm. He will confirm that yes, they're going to go ahead with another 75 basis point rate hike. And that, in theory, should send down gold and the stock market as well. But we don't know what else he's going to say. If he says anything positive about the stock market, then it's an issue, because then we have the price movements, the weak whiplashes. And then we have Christine Lagarde speaking, and we don't know what she's going to say. So it's full of qualitative events, and it's difficult to trade because, you know, we don't know what they're going to say. We have an idea, of course, what they have to say. If we think about the Fed, they have a job, which is fight inflation. It's not very successful so far. And we don't know what else he's going to say. Remember that he doesn't want to send the stock market down, but he has to. So he will be balancing his words very carefully today. The stock market is definitely on a downtrend, but we had yesterday a mini rally, if you can put it this way, which it went against everything common sense, because four Fed officials had speeches yesterday. They were really hawkish. So I think the market has really misinterpreted something. They read in between the lines, which is usually it happens. But if the Fed comes out, or if J. Powell comes out really hawkish, stock market should continue downhill. And, you know, it's confirmed by technicals, lower highs, lower lows, beautiful market structure. The only issue is this consolidation right here, because that is a bullish continuation signal for me. But I'm shorting US 30. US dollar, we don't know how the market is going to react to the rate hike of the ECB. But looking at the market structure, still bullish. We have a nice bull flag pattern. So I just entered into a long position on USD Japanese yen, shorting US 30, and I entered a little short on gold. Let's have a look on gold as well. Cheeky short on gold. But today, you know, market is going to be very volatile, so make sure that you manage your stop loss accordingly. This is not financial advice. Everyone is responsible to do their own risk management. What do you think about today? What's going to happen with the ECB rate hike?
Yes. Hi, Thomas. How are you?
Hey, Marwan. Good.
Seems everybody's winding down.
Yeah.
Yeah, they're gonna increase, of course. As someone said in the morning session, we have a big hike on euro, and then people will realize later on that the difference in interest on the US is more, and you know, the usual, and then the dollar will still be a winner. That's my opinion.
Yeah, I mean, if you look at the interest rate in the US, I showed you many times this chart. You know, the last time when we had 8% inflation was back in 82, and that time at 1982, when interest rate was this high, the Fed, with the guidance of Paul Walker, who's a famous central banker, so he matched inflation with the same amount of interest rate and even beyond. So if inflation was 10%, he went to 11%, 12%. And you can see that Paul Walker raised interest rate all the way to 20+%. And that's the federal funds rate, which meaning that it translates down to the consumer market. For example, consumer loans were at 40-50%, mortgages were at 50%. So it's crazy just to fight inflation. And if you look on the right, this is where J. Powell is with its modest 2.5% interest rate. Fed officials already confirmed that they see interest rates going up all the way to 4% throughout 2023. So it's inevitable unless we have a really, really shitty market. But currently, economics and fundamentals pointing to the direction that the US economy will sustain further rate hikes because we have a tight labor market, still overheating, not growing economy, but overheating economy. So definitely there's space for other rate hikes. How is the euro going to react to this? Well, the euro interest rate is at 0.5%, so well below 2% less than the US, meaning that the interest rate differential brings more attention and demand towards the US fixed income market. It's common sense, it's numbers. So today we're just going to see how the market is reacting. But I feel that is going to be volatile because, you know, last time when the Fed or the ECB raised interest rates 75 basis points, it was many, many years ago. And Jay Powell is speaking an hour after, so be careful. It's an exciting day on the financial markets. But what I'm expecting is long-term or medium-term stock market to go down, US dollar to strengthen further, if the market doesn't see a competition in the euro hike, and gold obviously to continue downwards, but we don't know when. It could be that we have a fake out like we had last time, and price comes back to 32,000 and then drops. We have so many, you know, we're shooting at a moving target today. In terms of Euro USD, it's tough, but we already discussed this morning. You know, price is at, let me just put it out on the chart. Price is really massaging the parity level, but it's moving sideways for weeks now since it reached the parity level. So I think the highest it will come maybe back to a little bit higher, but I'm expecting that after the hype has gone away, the euro to continue downwards. But remember that Christine Lagarde, Christine? Yeah, I think it's Christine going to speak today. Yeah. President Christine Lagarde is going to speak today, and she can move the markets. We don't know what she's going to say, and any word she says, whether it's dovish or hawkish, can move the markets.
I guess that we have to clear some liquidity before we get the drop. So we have, I think the area that you highlighted, we're going to go a little bit above. If you go back to euro dollar.
So we have 5 minutes until the rate hike. I don't know how many. What should I put on the screen? Dow Jones, US dollar. Yeah, US dollar and gold.
Euro dollar, if I can show you something, please.
Mm-hmm.
Can you zoom back? Okay, we have liquidity above this area here.
Mm-hmm.
Yeah, you see those highs?
Yeah.
1, 2, and even this 1, 3. So we should breach above this to take the liquidity first. And this is most likely how the market acts. And after that, we can see the drop.
Yeah. So let's wait to see how the market is going to react. And then when you see that the price is getting exhausted, most likely during Christine Powell's speech, because temporarily, I think the market will be pushed higher, as Ali said, to these levels, at 1.0 thousand. But when Christine Lagarde steps on the stage, she's going to confirm that the ECB is going to raise interest rate. Now, Jay Powell also going to be leaving a message for the markets because the Fed will enter into a blackout period as the rate hike is coming next week or the week after. So soon the Fed will go into a blackout period where they're not allowed to communicate anything to the markets. And also don't forget that they ditched the forward guidance, which they didn't really ditch it because Jackson Hole was designed to move the markets, if you remember that. So for now, I have positions on gold short, stock short, USD long, but I'm gonna lock in positions before the actual rate hike. And now we have how many minutes? 3 minutes? 2 minutes.
Oh, we are so nervous now.
So let's see how the market is reacting. You don't need to jump into any trades if you don't know how is it going to affect the market, because to be honest, no one knows really. Then just sit back, relax, enjoy, and watch the market and learn. Listen to the conversation, what me and the fellow colleagues in the Zoom have to say.
Me, myself, and I.
Damn right.
Mirror, mirror on the wall. I don't know. It's my school time.
Sounds like.
Yeah.
You had a good day.
What's it? De La Soul?
Hola.
Wagwan.
Wagwan.
He's been watching movies. Raul has been watching movies. He's not been trading.
Yeah, De La Soul. I'm right.
Mirror, mirror on the wall.
Is it just me, myself, and I? Solo ride until I die.
Oh my god.
What time, what year is that song?
I don't remember.
Long
Someone
time
is
ago.
someone is placing heavy bets.
Oh,
And
already it did.
let's short the euro as well.
Yep.
Euro is dropping.
Yep. Let's see.
The pussies still jump. And jump the ship.
Oh, the euro is maybe just the pre. It's just no. Be careful. Wait. Definitely, the market is moving.
Yes, sorry.
So we said that the euro should jump temporarily.
What are the numbers?
It's the same,
Here we go.
75. And
See?
euro is going up.
Go Euro, go. Go Euro, go.
Where's Donald Duck on the background?
Someone has a duck.
Yeah,
I think
it's
they-
next to me. I'm
I
sitting
think
in
they're
the cafe.
trying to dominate or outperform Raul and his cock.
Yeah, you can't give up.
You gotta see the ducks next to me. They are crazy.
You mean your colleagues?
No,
Oh.
I'm sitting in a cafe, and next to me we've got some ducks.
Oh. Cool.
No, the numbers should be out by now. They didn't. Yeah, they did. 75 basis points. All right. Let's see how the market is reacting. Ah, stocks are.
At least
Edging
some
higher.
movement. Everything started to.
Remember that Powell's speech is coming an hour later. And that's the key that we're waiting for. It's not, for me, it's not the ECB rate hike, it's the Powell speech. It's most likely the market is going to find ceiling or bottom before Powell, and when Powell comes to the stage, everything will be reversed. At least that's what I'm waiting for.
Yeah, what's up, Duck?
Wonk wonk.
Walk one.
I'm gonna mute myself.
Right, walk one.
It's not the kind of... I was expecting some bigger volatility. So definitely market is waiting for Christine Lagarde and
Oh my
Jay
God.
Powell.
I've made some really good money scalping. That's it. You see those candles? Sell high, buy low. That's how you make quick money.
Buy high, sell low
Quickie.
in it.
You had a
No.
quickie.
Yeah, that was quick scalps. That's it.
Okay.
I'm gonna wait. Is the Powell speech streamed today? Because maybe we can listen into it.
I don't know. I don't know.
Yep. I'm still shorting US 30. That is positive for me. US dollar to go higher.
Yeah, for me also positive. I'm
Yeah.
still in the sell.
On USD.
And gold.
You selling
26.
US dollar?
No, gold.
Ah, good.
I have
Good,
an
good. Gold
order
is a
from
sell.
26. 26
Yeah,
was
gold sell.
the top of an order block of support and resistance level.
But these are
True,
just,
yeah.
it's not financial advice. You know, we're not out of the woods yet. We still have a Powell and the Lagarde speech.
No,
So-
no, but I see it's almost hitting 2K, so I'm happy.
US 30 is, it's already in profit, and gold as well.
Yep.
I did leave a little bit wider stop loss on US 30.
If
after
you look at
yesterday.
gold, Raoul, you'll see that
Yeah.
it cleared also liquidity from the previous highs,
Yeah.
and after that it dropped. So
Yeah. The one call it order blocks, the other is support resist. We
yeah,
all
well,
all
it's a mix
agree
of,
that's an
it's a mix of
liquidity.
them all.
Yeah,
It's a mix
Yeah.
of them all actually. Yeah,
It's,
that's why yeah, sorry, go on.
point of interest for me.
Exactly.
It's better to call that if you see some price action, some patterns or
Yeah.
something to say, okay, it
POI.
respects or not.
Right.
Nice, everything is going according to the plan.
Yep.
Don't jinx it, man. Come on.
Well, someone is buying gold on YouTube, just said.
Look at you. Look, good luck.
Good luck, my friend.
Hasta la
See you on the
vista.
other side. Is it your
Oh,
first
the-
time? Well, maybe
Hello,
he's
everyone.
right. So I don't want to be too cocky because, you know, as soon as I say something or as someone
Yeah.
is confident, the market slaps you so freaking hard. You're dizzy for 2 days. So let's be humble.
Yeah, before the conference, we won't see any crazy moves. That's it's a well-known actually way of
Who knows?
moving market moves.
Maybe Powell
won't
is
see
going
any-
to leak
yeah.
leak some other information to the Wall Street Journal before the speech.
All I can say that they're gonna be playing football with us today. The
Yeah.
ECB press conference and then Powell, they can just turn it the table upside down.
The worst thing is that the ball is going to be our balls. They're going
Our
to kick-
account.
No, they're going to kick my balls and everyone else's balls today. I mean, these heavyweights, Lagarde and Powell.
Yep.
Good Lord, save us.
Have mercy.
Shit, I forget to share my YouTube link.
Yeah, the problem is that somebody asks a question and then the guy picks his nose and
My
somebody
balls.
interprets that as
Everyone else's
the
balls today.
hawkish or dovish
I
move.
mean, these heavyweights.
And the market crashes. So
Sign language.
yeah, exactly. Like he's picking his nose. Oh, this means that he's dovish. No,
Yeah, I mean, it's down to personal and individual interpretation, the narratives, and usually the market is just, you know, sometimes reacting in a really more idiot way. That why did the market think that the Fed has changed into a dove overnight? But anyway, be careful today. You know, why the stop loss, or don't know, small positions. That's the most important, and use a stop loss. But not financial advice. I'm only drawing lines on the chart, which means you are responsible for every trading decisions you make. Don't fuck it up today.
Okay, I've made a bad decision, but not on trading. My laptop battery is about to die. Shit.
Make sure you set your stop loss before it does.
Take partials, my friend, for sure.
Yeah, especially because, you know, if you're...
Put it on break even.
When there's
The
high
other phone is
volatility...
okay, but yeah. How did I miss that?
Yeah, Donald again.
Hey, Tomasz.
Raim, where were you, my friend?
How are you, brother?
I'm very good, but
I'm
we
in
missed you.
Curacao.
I know you in Curacao, but were you drunk for 2 weeks? We haven't heard a single word.
I'm here. I was following some lives that you were doing. I was just joining. I wasn't really trading.
It's very disappointing,
in the
my friend.
summer. But now I'm back.
Good. Welcome back.
How low do you think the US stocks can go, Tomasz?
I don't want to say anything because yesterday was a shit show with the overreaction of the market, and today is going to be, again, I think is going to be a difficult day. But in an overall, when the dust settles, when we over all of this Lagarde and Powell speeches, then we should see the real movement. Until that, when these two set or come to the stage with an hour apart, we're going to see some huge volatility. So before that, I'm going to reduce the positions. I don't even want to put a buy or sell signal into the chart because, you know, it's going to be volatile. But generally, Powell is going to reassure the market that relax, guys, we have more rate hikes coming. That's going to be bearish for the market. On the other hand, midterm elections are coming up, and he doesn't want to destroy the stock market, so he has to calm down the market a little bit. The blackout period is coming soon, so they won't be able to communicate anything with the market. So I think he's going to take every opportunity to fuck up the market today.
Cool.
Okay, thank you, brother.
You are very welcome. Oh, US 30. Why are you doing this to me? Like, honestly?
Brother from another mother.
Bruv. I was in 2k profit, now down minus 600.
Double your money in 24 minutes.
Oh, gold.
Yeah.
Now gold is moving the way I want, but the stock market is... Okay, gold is running in 52 pips of profit. US 30 down minus 500 points. USD Japanese yen up 23 pips. And the other positions. I see many people buying gold. Ebba, Zach Petrosian. Bye Suka Gandoni. You know, anything is possible on the market.
No, we don't buy things.
Yeah, if you say something in the YouTube chat, please just give some more narrative to why are you buying, why are you selling, why do you think you're right or wrong. Just give some more depth and context to your analysis. It helps us to understand where you're coming from.
Thomas, the US 30 stop loss 31,716 is okay, you think?
30, say it again.
31,716.
Yeah,
Well,
it's I think it's just it's above the wicks. I think it's reasonable.
Okay, thanks.
Okay. Afsal Youssef says it's scalping buys. Yeah, it's scalping is okay. But longer term, gold has no chance against high interest rate.
No.
Unemployment is in 2 minutes.
Very good, my friends. We are going to have some volatility. Now place your bets. You can double or lose your money within 24 seconds.
Good.
Nobody's gonna look at the unemployment claims today
No.
because it's in the middle of two important news.
Stefan Christie is on the sideline. That's very wise. I mean, sometimes you just need to sit back and observe the market to understand the dynamics behind the market. That's the only way to trade. Observing, no stress, and learning.
Good rule, my friend.
Mm, 1 minute until initial jobless claims and unemployment. No, initial, yeah. Buy or sell? Tell me. Buy or sell?
Sell.
69% of the YouTube voted a clear sell. 69, what a good number. Where's Ian?
69, always good.
69, yes. Wine, dine, and 69. What a coincidence that... Oh, God. And initial jobless claims... improved. Less people claiming unemployment benefit, but the continuing jobless claims is worse, so the US economy is not doing as well as it did last week. Let's see how the market is going to react. Is it going to deter the Fed from continuing the rate hikes? I don't think so.
The unemployment claims is out.
Let's see.
it
Is it
is
going to move a little bit the
positive.
market, or we're still...
It is good for the dollar. Less unemployment claims, I think. It's been done.
But the continuing is actually worse, so there's more unemployed. The initial is less, but continuing is more.
Yeah, so the rate of unemployment claims is less, but unemployment claims in total are increased.
Okay, I'm going to reduce the position on US 30. That's a little bit too big. As we come closer to the power speech, gold is nicely moving downwards. US dollar strengthening. Now the euro, it does nothing. It's waiting for President Christine Lagarde.
US dirty.
I like that. US dirty.
Let's take profit at 1680, Thomas.
Yes, 1680.
Something like
Our favorite number. I think that's going to be a number of our anniversary or something. Oh,
Yeah.
I can see Ali now. Wow, it's good to see you, brother.
Hi. Hi, how you doing?
Good to see. Finally, I can attach a face to the man,
So much.
to the name.
Yep.
Where is Ali?
Gold is running
see
in
him.
76
Hi,
pips
Marwan.
profit.
How you doing?
How are you, Ali? Good?
All good, all good. Thank you, bro.
To Habibi, making friendship.
Habibi.
Inshallah.
I see some love in the air.
We are going to double our money.
Always.
Trust me, brother. We are going to double our money. We already
We don't
gold
use
is
it in
running.
the official way. more
Gold
like
is running in
it is light.
80. Gold is running in 85 pips of profit. US 30 is 45. US the Japanese in 37. So guys, we made already 100 pips today. So, you know, any day of the year, I would be happy with this.
Where can I sign?
The-
Ah, but gold go down and even more. Look,
Do you use MT4 or MT5?
4.
4. Okay, give me your account details. I double your money.
Nobody gets my account details. I don't trust anybody.
Woo! Okay, everything is going as planned for now. For now. We still have Powell to give a speech. Dow Jones is breaking the consolidation or massaging the bottom of the consolidation.
Yeah,
Ah, finally, some money is coming to the house.
Hey, hey. Oh.
Where are you, Ali? In London?
No, in Turkey. Istanbul.
Arkadaş.
Evet. Arkadaş.
Lamachun.
Lahmacun.
We
It is Arabic,
actually
actually.
we have many Turkish words because Turks were on a holiday in Hungary for 150 years.
On holiday.
The not the Sultan. What was the name?
Oh,
the head of
Osman.
the Osman actually died right next door because I'm near to that town where he died, and when he died, they didn't tell the army. They just prepped him and set him out in front of his tent because they were sieging the castle near here, and if the soldiers would know that he passed away, they would have just go away. So they were kept it as a secret that he died. Fun fact of the day. The Great Osman Empire.
Well, the vacation state lasted for 400 years in our country.
Alright, now we a little bit moved back. You know, market is moving for Miss Lagarde. But first, is it going to be... Yeah, Powell first and then Lagarde. Obviously, they need to show who's boss. Oh, but no, hold on. We have an ECB press conference first. Now that is... Yeah. Okay. Remember that, you know, it's heavyweights. So if you have any positions, make sure you lock in some profits. Okay, I'm gonna lock in some money on gold.
I did also.
It's too much money on the table, so I'm going to just reduce it. Done. US 30. as well. Going to close down half of the positions, so at least I'm gonna have some breakfast for tomorrow and coffee. I think I can afford it from this one. Yeah, maybe a steak as well, steak sandwich.
You literally put your money on steak.
Yeah, to buy steak.
No, they say you put your money on steak.
Do you have kids,
Yep,
Ali?
I do.
That explains
Yeah,
everything.
too. Your battery is running low. You might want to plug in your PC. No, I don't want.
Oh god, the Queen is under medical supervision.
Yeah, that's true.
That's sad.
In the UK.
Well, I hope, Lizzie, you're gonna get better. Damn, she's a tough woman.
She is.
All the respect for her, like all the shit she went through. I don't know how much is true about the series, about the monarchy and the royal family, but it's a long life.
Yeah, don't worry. She always survives.
Oh, Irgio says my pip counter is wrong. Tell me why is it wrong, brother? Be happy says, brother, show me your profit. Why are you interested in my profit? You wanna get banned if you're spamming my chat? So why is the pip counter wrong? Tell me. Some serious cock measuring is happening on the YouTube chat. Calm down, boys.
Your pip counter is wrong. Trust me, brother.
Yeah, I mean, come on, it's a script. It's not me calculating. It's
Why?
not wrong.
Does it give a negative pips?
No.
No, I guess he's referring to US30 because the US30 count pip count is different between.
It's calculated in points and not pips, but many people, especially, some newer people who new to trading, they often, they pick something. Oh, that's wrong, but they don't even ask questions like, why is it showing different number? They immediately jump on like, oh, that's incorrect, and they don't understand the calculations behind the methodology. How is it calculated?
Hello.
Hello.
How are you?
I'm very good, sir. How are you?
I'm very good, thank you.
Are you in profit, Mr. Phillips?
Yes, finally.
Damn, you just started. Yeah, you started on the worst day yesterday, your challenge.
Yeah.
When I was putting together
start.
the baby furniture and I looked at the chat like, oh my god, I'm such an idiot. Everything was red yesterday. I was like, fuck. I thought about you.
Oh,
But recovered, Philip.
yeah, it's looking good now. I've got about 2.2% up right now. So let's see that keep going. Good.
Ooh. Gold is now 95, 94, 96 pips in profit, ladies and gentlemen. 98.
Yeah, that's looking good.
Are we gonna get 100? Are we gonna get 100?
Yeah, for sure.
There we go. Come on. Yeah,
yes.
Gonna take the lows.
100 pips
Don't worry.
profit on gold. And
It's gonna
135 pips on US30. So there's
Nice.
It's gonna take the 17-13 low, definitely. In my humble. Come on, just $3 more. Come on, come on, come on.
Give it to daddy.
You can
Bring it on.
You can do it. Trust me, dude. You can do it. Come on, Gold. Don't be greedy.
You got to take profits at your Gold.
ERGO came back like, why US 30 showing 1,000 pips? That's because in point, my brother, and not pips.
Yeah.
You need to understand how to calculate and why is it calculating this way.
Yep. I thought so. I thought he's.
Yeah, but the way I think, you know, it's you should ask with a question and not with a statement. And it helps you to understand things, how it works, and you seem less cocky. Because, you know, there's a really fine line between arrogance and confidence.
Yeah, that's right. I understood totally what he's. Yeah, I understood immediately what he's after, because I see too many people posting on the groups like 1,000 pips on US 30 or 2,000 pips on US 30.
Yeah, especially Instagram traders in the daily results, like, oh, we made 1 million pips on US 30. Yeah, right, on the 1 minute chart.
How do you calculate your points to pips?
Divide by 10.
10?
Yeah.
Yeah. So 130 pips you imply.
I'm sure there's a way to change it in the script, but I'm not really bothered. I see positive, that's good. I see negative, that's not good. Sometimes it may be good, sometimes it may be shit. So we are in profit for now.
Looking good.
Remember that we still have the Powell speech, the Lagarde speech, the ECB press conference, which is just kicked off now. Is it? Yeah, it started. Powell is coming on stage in 24 minutes. It's going to be a rough ride.
Let's hit 17.13 first.
The gold is doing really well.
Come on.
Golden Boy is asking, Tomasz, do you speak Italian? Ah sì, mangiare. Come si dice? Che cazzo?
Buonasera signorita, buonasera.
Prosciutto.
Come stai?
I can't.
How do you
Come
say?
stai, ragazzo?
Ragazzi. Come stai, ragazzi? Spero che tutto bene.
Yeah, I speak Italian. 1 million, 2 million, 3 million.
Oh my god.
Tomasz is multi-language. Si, senor.
Tomasz, can you speak Papiamento?
Alright, that's a bit too extreme, guys. But, you know, if I could learn it on a holiday, maybe you can teach me.
That's
Or
easy.
introduce me to some nice ladies who can teach me.
Which country is that?
Curacao.
Curaçao.
Curacao.
The Dutch
Curaçao.
Caribbean.
And Aruba and Bonaire speak it too.
Okay.
This is Curacao. It's beautiful. It does have the Dutch houses. It looks like, but more colorful.
Mm-hmm.
That's nice.
Wow.
That
Yeah,
is nice.
but those houses are just in the city, and those houses are like shops.
Mm. The same shops as in Amsterdam? Maybe.
No coffee shops.
Israel S. says, give me some Brazilian Portuguese, Thomas. Obrigado. Obrigado. Right. So the market is pulling back a little bit. Remember that Jay Powell is probably on backstage, pumping up, doing some push-ups and press-ups and preparing for his speech coming out to the market, and going to slap everyone like, fuckers, did you go long on gold and did you go short on US 30?
There we go.
Yeah.
There's a press release right now, and I think decisions. Yeah, it's been released. The monetary policy decisions. Let's see the press conference live. It is. I guess it is streamed. Yeah, it is streamed on YouTube.
Or the Powell speech.
No.
And follow a meeting by meeting approach.
Christine is speaking. Christine
We took
Lagarde.
today's decision and expect to raise interest rates further because inflation remains far too high and is likely to stay above
Can you
our
send a
target
link?
for an extended period.
Yeah, sure.
According to Eurostat's flash estimate, inflation reached 9.5% in August. Soaring inflation and food prices, demand pressures in some sectors owing to the reopening of the economy, and supply bottlenecks are still driving up inflation.
Usual economics. Bottlenecks, supply.
And inflation
Shall I mute my player?
Sorry?
As the current drivers of
I'm gonna mute my player.
No, you can. I think I enjoy having it. You can leave it. What do you think, guys?
Yes, please. Way through the economy and price setting, inflation will come down.
Oh, it will come down. Good.
Staff have significantly revised up their inflation projections, and inflation is now expected to average 8.1% in 22, 5.24. After a rebound in the first half of 22, recent data point to a substantial slowdown in euro area economic growth, with the economy expected to stagnate later in the year and in the first quarter of 23.
Oh.
Very high energy prices are reducing the purchasing power of people's incomes, and although supply bottlenecks are easing, they are still constraining economic activity. In addition, the adverse geopolitical situation, especially Russia's unjustified aggression towards Ukraine, is weighing on the confidence of businesses and consumers. This outlook is reflected in the latest staff projections for economic growth, which have been revised down markedly for the remainder of the current year and throughout 23. Staff now expects the economy to grow.
Oh shit, my laptop went to hibernate. I'm sorry about that.
It's alright.
Yep.
So we are getting closer and closer.
I send the
to...
link on. Yeah, exactly. That's the one.
No, I don't want privacy statement. I want to play the freaking.
You have to accept. You have to accept the cookies. You have no other option. I understand. I accept. Exactly.
I want a cookie. You know what does cookie mean in Hungarian?
We don't want to know.
Yes, I want to know.
It's a willy. I accept
Oh, willy, cookie.
Yeah, cookie. Cookie.
Now you gotta click on the link again, Thomas.
Modify.
click on the link again, and it will take you to the yeah, exactly.
Oh, she's just finished.
Did she?
And explain our assessment of financial and monetary conditions.
Can you hear it?
No.
The euro area economy grew by 0.8% in the second quarter of 22, mainly owing to strong consumer spending on contact-intensive services as a result of the lifting of pandemic-related restrictions.
I'm gonna put it on my laptop.
Over the summer, as people traveled more, countries with large tourism sectors benefited especially. At the same time, businesses suffered from high energy costs and continued supply bottlenecks, although the latter have been gradually easing. While buoyant tourism has been supporting economic growth during the third quarter, we expect the economy to slow down substantially over the remainder of...
Is it okay or too loud?
Can't hear
Really
it.
great.
It's up.
Good, bad? Can you hear it?
No.
It is too low, actually.
Yeah, we hear it rarely. Far in the distance.
Problem is that my microphone is not really designed to... I have to be really close to my mic. So maybe if someone can turn it on in the background, that would be better. Who's gonna do it for the team?
Yeah, I'll do it. Just give me a minute.
I can share my phone screen if that helps.
No, it's someone can start playing the stream.
Stood at a historical
Thank you,
low
Luis.
of 6% in July. Total hours worked increased further by 0.6% in the second quarter of 22 and have surpassed their pre-pandemic levels. Looking ahead, the slowing economy is likely to lead to some increase in the unemployment rate. Fiscal support measures to cushion the impact of higher energy prices should be temporary and targeted at the most vulnerable households and firms to limit the risk of fueling inflationary pressures, to enhance the efficiency of public spending, and to preserve debt sustainability. Structural policies should aim at raising the euro area's growth potential and supporting its resilience. Inflation rose further to 9.1% in August. Energy price inflation remained extremely elevated at 38.3%, and it was again the dominant component of overall inflation. Market-based indicators suggest that in the near term, oil prices will moderate, while wholesale gas prices will stay extraordinarily high. Food price inflation also rose in August to 10.6%, partly reflecting higher input costs related to energy, disruptions of trade in food commodities, and adverse weather conditions. While supply bottlenecks have been easing, these continue to gradually feed through to consumer prices.
Now she's talking about the future, but it's
as is recovering
long way down
demand
the road.
in the services sector.
We have a winter
The
ahead.
depreciation of the euro has also added to the build-up of inflationary pressures.
It's in the past now.
Price pressures are spreading across more and more sectors, in part owing to the impact of high energy costs across the whole economy.
Understandable, yeah.
Accordingly,
High energy.
measures of underlying inflation remain at elevated levels, and the latest staff projections see inflation excluding food and energy reaching 3.9% in 22, 3.4% in 23, and 2.3% in 24. Resilient labor markets and some catch-up to compensate for higher inflation
Look at gold.
Support growth in wages.
Yeah, in US30.
At the same
Nice.
time, incoming data and recent
Gold
wage
is
agreements
dropping
indicate that wage
well.
dynamics remain contained overall.
It's going to take the 1730.
Measures of longer-term inflation expectations currently stand at
USD
around
is strengthening.
although recent
I mean, Christine
above-target
Lagarde is like
revisions
cutting the
of
tree
indicators
under herself.
warrant
That's a saying in
continued
Hungarian,
monitoring.
like kicking the chair.
Let's turn to our risk assessment now.
Risk assessments.
In the context of the slowing global economy, risk to growth are primarily on the downside, in particular in the near term. As reflected in the downside scenario in the staff projections, a long-lasting war in Ukraine remains a significant risk to growth, especially if firms and households faced rationing of energy supplies. In such a situation, confidence could deteriorate further and supply-side constraints could worsen again. Energy and food costs could also remain persistently higher than expected. The further deterioration in the global economic outlook could be an additional drag on euro area external demand. The risks to the inflation outlook are primarily on the upside. In the same way as for growth, the major risk in the short term is a further disruption of energy supplies. Over the medium term, inflation may turn out to be higher than expected because of a persistent worsening of the production capacity of the euro area economy, further increases in energy and food prices, a rise in inflation expectations above our target, or higher than anticipated wage rises. However, if energy costs were to decline or demand were to weaken over the medium term, it would lower pressures on prices. Let's look at the financial and monetary conditions.
I'm looking in some more profits
Market
on
interest rates have increased
gold.
in anticipation of further monetary policy normalization in response to the inflation outlook. Credit to firms has become more expensive over recent months, and bank lending rates for households now stand at the highest levels in more than 5 years. In terms of volumes, bank lending to firms has so far remained strong, in part reflecting the need to finance high production costs and inventory building. Mortgage lending to households is moderating because of tightening credit standards, rising borrowing costs, and weak consumer confidence. Summing up, we raised the 3 key ECB interest rates by 75 basis points today and expect to raise interest rates further because inflation remains far too high and is likely to stay above our target for an extended period. This major step front-loads the transition from the prevailing highly accommodative level of policy rates towards levels that will support the timely return of inflation to our 2% medium-term target. Our future policy rate decisions will continue to be data-dependent and follow a meeting-by-meeting approach. We stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term inflation target. We are now ready to take your questions.
I have some question, Christine.
The first question goes to Luke Hyten of Market News International.
Good afternoon, President Lagarde. 2 questions, if I may. The first, could you give us a flavour of the government council's discussions, the arguments for and against that led to today's decision to raise rates by 75 basis points and not, for example, 50 or 100 basis points? And then my second question, from the present standpoint, how close to both the neutral rate of interest and the expected terminal rate does today's decision bring us in your view?
Thank you very much for these 2 questions. I'll take them in turn. On your first question, the Governing Council unanimously decided to raise the 3 key ECB rates by 75 basis points. We had different views around the table, a thorough discussion, but the outcome of our discussion was a unanimous decision. So how did we come to that decision? As I have said before, and as I have repeated in that monetary policy statement, since our last July meeting, we are data dependent and operate meeting by meeting. This is the methodology that we adopt. So we were presented by staff with their projection. We had the inflation numbers and the growth outlook, of course. So in the face of these extremely high numbers, the last reading was 9.1 for a monthly reading. But if you look at the last 10 readings, they were the last 10 highest readings in term. We had a good analysis of the decomposition of the sources of inflation, a good analysis of where the inflation actually lies and what products are particularly affected.
Gold is
and
running in
while we
120 pips profit, so
energy
please
is still
consider
the major
locking in
source
some
of
profit.
inflation. It's 38.3% compared with a year ago. Slightly moving down in these August numbers, but it is still a dominant factor, as is the increase in food. But we also have an inflation that spreads across the whole range of products, in particular in the service sector, where supply factors are less prevalent and where demand plays a role. So we have a range of the product and services that are actually north of 4%. So in the face of an inflation that is extremely high, that is of a magnitude and persistence across sectors of that nature, obviously determined action had to be taken. And this is very much in line with our determination to actually normalize monetary policy as we started back in December. So for those who consistently repeat that
Gold is
the
running
European
again,
Central
120
Bank
pips
is
profit.
lagging behind,
USD Japanese yen
contend
60
that
pips.
we
Oh,
are
the euro
on a
is
journey
getting
that
crashed.
started back in December, where
Hell
we
yeah.
decided to
That's
put an
solid
end
shit.
to the asset purchases under PEP and under APP, to move out of negative
the
interest
cheeky
rates as we
half
did
lot
back
sell
in
on your
July,
USD.
and now to continue on our normalization path with the front-loading exercise that we conducted today, because we believe that the deviation from target is such that it warrants this front-loading. And we also decided that this was not an isolated decision, but that we would raise
If you're
interest
surprised or
rates
thinking
further.
what's front loading is,
We
it's
didn't
not the
say
thing
that
that
we
you
would
do in the
raise
bed with your
interest rates
girlfriend.
at 75% as if 75 was the norm. It is not. We will determine
No.
meeting by meeting on the
It's a
basis of
different front
data
loading.
how we reach to that level of interest which will actually return us to the 2% target in the medium term. It is not there at the moment. Our forecast at the end of December, which is not the medium term, but it's the end of our projection exercise, is at 2.3. We are not there.
On YouTube
So we
said
have
went full margin on
more
EU
journey to
and
cover
Forex my account.
going forward.
Bad.
But we had a very, you were interested in the flavor of the Governing Council. We had a very cordial, effective, deep discussion on all these matters. And that certainly helped us on the basis of the proposals by staff and the recommendation by our
We
chief
are
economist,
400 pips up
Philip Lane,
on
to actually
gold,
go collectively in
120
the
US
direction of
32.41,
this
US
75
Japanese yen 60 pips. That's
basis
400 pips, guys.
Now you asked me
In an
about
hour.
how close we are
Who's in
to
profit with me?
the rate. Whether
I am.
you call it a neutral or terminal is obviously different. But I would like to say this.
Yes.
What I know today is that
challenge going
zero is not the neutral rate.
Well, this is certainly helping.
Where we are is not the neutral rate.
Trust me, brother, you can double your money within 24 hours.
It takes a front loading. It will take further.
Don't forget, guys, we've got
Powell
press conference in 7 minutes exactly. So
meeting by meeting, and on the basis
don't leave the money there.
Yep.
But we are certainly heading there because that's where we believe that we will actually deliver on our 2% medium-term target.
Excuse me?
As indicated in our strategy.
I can.
Cool stuff. We've got 2 minutes to Powell.
Yeah. Can we switch to the Powell speech, please, Luis?
Very much for taking my question.
Or Rob? Who's playing the stream? Is it Rob, you, or Luis?
It was me. It was me.
Thank you so much. Thank you so much, Luis. Who has a link?
It's here.
Go. Find the link. Find the link.
You're speaking already?
Started. Apparently, guys, lock in some profit. Powell is coming on stage.
Inflation was low and stable, and the economy was growing steadily,
Bugger.
with no obvious imbalances threatening continued expansion. So, of course, none of this high inflation that we see around the world now would have happened without the pandemic.
He likes to come early, that's why.
The pandemic severely disrupted the economy, gave rise to much more dire economic consequences than actually transpired, really. And that was thanks in part to the policy response. So, to start with the policy, there's no question that policy certainly supported strong demand. But in my view, you would not have seen anything like the inflation that we have seen without the pandemic effects. And those pandemic effects include both shifts in demand and also playing a role in, not solely causing, but playing a role in the supply side constraints that emerged. So as for the pandemic, it did lead directly to an extraordinary shift in demand away from in-person services and to goods. And that shift, of course, was a major contributor to inflation in goods prices, which was really the main inflation story at the very beginning when inflation broke out suddenly in March of 2021. It's worth remembering that inflation actually declined in the early stage of the pandemic and then suddenly rose up in March of 21. The pandemic also contributed to the constrained supply in a number of important ways, including a large and persistent reduction in the size of the labor force, which contributed to extremely tight labor market conditions and upward pressure on wages. Also, the turmoil in global supply chains was probably caused to some extent by pandemic-related shutdowns as well as strong demand, and particularly goods demand. I think cars are a good example. So yes, people had money and rates were low and demand for cars was strong, but also the pandemic shifted demand upward for cars because some people wanted to go with public transportation. That amped up new demand for new and used cars. And also the shortage of semiconductors for cars emerged from pandemic-related demand shifts as well. So the bottom line for me is that there's really a role for both here, and the two are tangled up in a way that it's really not easy to disentangle.
Okay, I don't know whether he's trying to explain himself why inflation got out of hands, but he's giving a history lesson about the supply and demand shocks that happened. The problem here is that we have live questioning, and we don't know what the question is going to be. Are they going to ask about the stock market or the possibility of reducing rate hikes? That can push everything to the opposite direction. This is why I hate journalists when they ask questions.
The greater the extent to which inflation slips the leash, the higher the cost and greater economic damage necessary to bring it under control. I worry whether we have the resolve to bring inflation under control today to face the potential economic costs. I took some comfort from your recent remarks in Jackson Hole, which seemed an attempt to signal that kind of resolve. But I do remain concerned that, the intense political pressure that might be brought to bear to avoid collateral economic damage before the inflation fight is won. And I just wondered if there's any way you can help me sleep a little bit better on that score.
Sure. So I think it's worth going back and remembering, and I pointed this out in my remarks 2 weeks ago at Jackson Hole, 10 days ago, that what Paul Volcker did and the Fed did to finally get inflation under control followed several failed attempts to get inflation under control. And what had happened over the course of that long period of the great inflation is that the public had really come to think of higher inflation as the norm and to expect it to continue. And that's what made it so hard.
I'm closing most of the position on US 30, blocking some profit. It's just too much money on the table to have this exposure under the Powell speech.
We need to keep at it until the job is done.
Locked in.
To avoid that, we think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period of price stability. You know, that speech, the point really there was to deliver a speech that was narrowly focused on inflation, more direct and a lot shorter than a typical Jackson Hole speech. And I thought that what was appropriate was a very, you know, kind of concise and focused message. To your question, the message really was that the Fed has and accepts responsibility for price stability, by which we mean 2% inflation over time.
Now he's focused
that,
on...
Again, to your question, the longer inflation remains well above target, the greater the risk that the public does begin to see higher inflation as the norm. And that has the capacity to really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely loosening policy. I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done. I can also assure you that we never take into consideration external political considerations. You know, we are accountable to the public through Congress. That's a very fundamental, important aspect of our work. But
do you remember what I said before the stream to you guys in the morning briefing, that he's going to reassure the markets that they're raising interest rates, and that is quite hawkish. You can see that gold is already started to drop another 20 pips. And the USD strengthening, the dollar.
When there could be claims from political players that, you know, inflation is back in its bonds. Jim mentioned opening remarks. 2 years ago, you moved to a new framework, flexible average inflation targeting, and I'm bringing this up now because again, reiterating the point about trying to sleep better at night. You know, by many accounts, it's created some more uncertainty in the market, as you mentioned, and coming at a time when inflation now has increased so markedly.
Look at this beautiful. Everything goes as planned. Stock market down, dollar up, gold down. This is what planning is, or preparation. Carefully considering the scenarios. And this is the result. Economics
2018, and we announced the results in August of 2020, and it really followed 25 years basically of global disinflationary forces, and the problem was that monetary policy rates were close to the effective lower bound much too much of the time, much too close, and even during good times. So that meant that central banks were having a hard time all over the world, you know, finding ways to support the economy when it was needed, and that's why central banks, including the Fed, resorted to things like forward guidance and asset purchases. So that's why we did that. But the changes that we made were sort of a very mainstream part of the literature around makeup strategies. But really, the point of our framework changes, the point of all of them, was to, and we said this very clearly, was to have inflation expectations well anchored at 2%. That the average inflation targeting idea was meant to support having inflation expectation. That is the goal at 2%. And the reason is that we believe that the public's expectations of future inflation will play an important role in the actual path of inflation. So that is kind of the fundamental basis of our framework. And as I just discussed, it is very important that inflation expectations remain anchored. I think the evidence today is that if you look at longer term expectations by households, businesses and forecasters, and also markets, you'll see that they are pretty well anchored around 2%. Of course, short-term expectations are higher because of high current inflation and also the clock is ticking. As I mentioned, the longer that inflation remains well above target, the greater the concern that the public will start to just naturally incorporate higher inflation into its economic decision making. And our job is to make sure that doesn't happen. And we're committed to doing that job.
Again, hawkish reassurance to the market that they're going to raise interest rates and other monetary policy tools they have at their disposal.
But the labor shortages persist.
Like open market operations, minimum reserve requirement ratios.
Some of the ability to manage
all the fancy
this
stuff.
Process out of your hands. To the extent that there continue to be labor shortages, does that then feed into expectations that the public has about inflation, as you mentioned very prominently?
Well, I think you're right that if it does turn out that we are in a world of a persistent labor shortage over time, that'll be a challenging world for companies, and it will certainly create upward pressure on wages and that sort of thing. Today, the labor market demand is very, very strong still in the labor market. We're still printing new payroll job numbers at a high level.
The strong labor market that he's talking about is another confirmation that they can raise interest rates higher because the market can allow them, the Fed, to raise interest rates.
Our policy interventions, what we hope to achieve is a period of growth below trend, which will cause the labor market to get
period below growth, the growth below trend, meaning that it's slowing down, not growing.
Back down to levels that are more consistent with 2% inflation over time. That's what we're trying to achieve. The shock to labor supply that we got from the pandemic was large and unexpected, and unfortunately persistent. I will say that just in the very last labor market report that we got last Friday, we did see a welcome increase in labor force participation. Nonetheless, still a full percentage point below where it was before the crisis. And I think it's important as a society that we have measures in place to support a strong labor market and high labor force participation, and that goes beyond what we can accomplish with monetary policy.
You've made some contrast to how things are different today. What's different today from the high inflationary period of the late 70s and early 80s? I guess some other distinctions are, I remember as a student in Boston in the early 80s, in the days before the internet, I remember seeing people actually line up at the Fidelity office to see the monetary aggregates released on a weekly basis. And the way the money travels through the economy has changed dramatically since Milton Friedman first said that inflation is always and everywhere a monetary phenomenon. I'm just wondering, how do you respond when people look to the huge spike in government spending and say, I think you answered this in part in the first question, but when you look at the huge spike in spending and say the Fed's printed all this money, so of course we have inflation.
So I graduated from college in 1975, which was close to peak monetarism.
The dollar is getting stronger now that, as I said before the stream and during the stream, that Jay Powell has the job to reassure the markets that, don't worry, we didn't forget you, we're going to screw you over, we're going to raise interest rates, you're not forgotten, it's coming, so prepare. That's what he said basically.
And then also to support the economy, and our balance sheet expanded dramatically. But remember that our purchases of securities don't actually increase the quantity of government obligations held by the public. They really change the mix because we issue bank reserves to pay for those securities. So we're not changing, the quantity of obligations. That is not to say that money growth wasn't high. It was, of course, extraordinarily high in 2020, and then slowed down in 21, and now is quite sluggish. And I guess I would just say it this way. Whatever caused, there are different theories on what caused the inflation that so suddenly jumped up out of the ground in March of 2021. Whatever that cause was, the relationship between the money supply and inflation, economic output, has been much more unstable than it was in Friedman's day for a very long time. And so literally changes in monetary aggregates have not had a consistent, reliable relationship. They haven't been a good predictor of the economy or of inflation. Now, of course, the economy is ever changing, and that too could change, to where it is important again. But for now, and for really many years now, monetary aggregates don't play an important role in our formulation of policy. We don't think they're generally a good way to think about policy or about inflation. It's more about demand and supply and things like that. So that's where we would be on that.
That actually calls to mind, you know, at Cato, we do have a strong aversion to a fully discretionary fiat money system. And so we do like to socialize and promote alternative frameworks that could policy and a market direction that eliminates some of this discretion. Jim mentioned that a consistent theme over the years of this conference has been, you know, potential monetary rules. And, you know, that kind of calls into question whether inflation and prices are really the best targets to use for monetary policy. Some folks have advocated for a rules-based system, such as, you know, targeting nominal GDP is something we've heard a lot about in recent years, partly because, as you say, monetary policy is not suited to address, you know, address supply shocks.
I didn't want to disturb the thing. I've got a quick 3-minute break. Okay, I sold. Yeah, I'm good. I just wanted to ask a quick question. I sold gold and
rules, of course,
S&P 500. I've taken partials
Taylor
of
rules
gold.
have become part of the fabric of
Shall I keep
economic analysis,
S&P
particularly
500 until
policy
your US
analysis,
30 TP?
in ways that must be far
I
greater
would,
than John Taylor
but you know, it's
when he
up
wrote his
to you
original
whether you want
article
it.
in,
I think the stock market is going to go down,
central bank and
dollar is
Fed
going
has
to
never
strengthen. I'm not too sure
tied
about gold, but
our
it should
monetary
continue
policy
downhill.
decisions to any formula, including Taylor
S&P
rules. But
has
Taylor rules
dropped quite a
nonetheless
lot.
are
I've got my
ubiquitous
take
in
drop.
S&P
S&P
you have
drop.
to have a variable, you know, a way and a model of
38.95 on
explaining how
S&P
monetary
500.
policy will react, and some kind of Taylor
Let me
rules
look
is
at the
now
charts.
they're very much part of the way we think. In terms of nominal income targeting, and by the way, I know that Cato and is one of the home courts for nominal income targeting, along with Mercatus and some others. And I know that this
What's
is
the target?
a lot of well-known experts, many of them at your
38.95.
institution, you know, do support nominal income targeting. And I'll just say that,
I can
you know,
see the
we've looked at that,
possibility.
I've looked at that, and really come to the view
No, for a swing, it's good.
that
I think that, you know, stock
nominal income
market's
targeting
going
is
to
not the
crash.
right way to go, and I'll try to explain why. By the way, I
I've
know
got
that
only one
these
lot,
arguments
so
are
I
well
guess like
known
I'll
to
just
nominal
leave it.
income targeters, and
We don't know
will be
what
found to be unpersuasive. But
and
nonetheless,
how
I'll just
he's going
give
to
you my
continue the
and one
speech.
thing I would interject is that we have debates internally as well. And I think for us, the concept really is more, you know, wanting to socialize a number of alternatives and try to move towards alternatives that do have more of a market basis and again, remove discretion.
I think that's a very healthy process. And, you know, the whole debate over many, many years about rules and discretion is a fascinating and important one that is far from over. So it's really a mix of the two.
I'll let you lot go. I've got to get back to work. Enjoy the profit.
to nominal income
Mate,
targeting.
you shouldn't work.
You know, we've got a
Shouldn't be
dual
working.
mandate,
You can make
maximum
money. You
employment
can
and
double
price
your
stability,
money here.
and it comes down
I'm
to
doubling my
is,
money and I'm working.
nominal income targeting the
Very
best way
good,
to
my
promote
brother.
that.
Enjoy.
We don't think
See you
it is. I
later.
don't really think it is. And
Yeah, I'll
part
show
of
you
that
later.
just
Thank you
is
very
would
much.
be, I think, very difficult
See
to
you.
explain to the public the relationship of a nominal income target, nominal GDP target to those goals. It's just it's a level of complexity that, you know, even some economists and policymakers struggle with, let alone the general public. So it seems like it would be a reach to sort of put the, you know, for us to have that be our fundamental framework. And a couple of examples that would be difficult. One in particular would be, what do you do with changes in trend growth? We have, you know,
Guys,
highly
did you realize
uncertain
that we
estimates of
made
levels of
600
trend
pips
growth that
today
we amend
just by
down through the
listening to this
years and many years.
conversation, this speech?
Many years later, we may have a very different view, but it is broadly understood, I think, or believed, thought that trend growth has declined considerably rather, over the course of the last, well, since the global financial crisis. So how do you incorporate that into a nominal income target? Do you just raise the contribution of inflation, or do you annually re-estimate trend growth? And if you do that, you're incorporating both communications issues, but also, you know, just big chances of policy error, because we just don't know these things with that. We don't know any of the starred variables, so to speak, with that level of certainty. So I'll just say it's really interesting, and it works very well in models, but it seems
What did you say, Ali?
difficult to implement from a practical standpoint, and it's not something that we have chosen to do or that we, you know, are currently looking at.
You mentioned the dual mandate. You know, I don't want to ignore the unemployment rate during this conversation. You know, when I said earlier that we obviously have an aversion to a fully discretionary monetary system, many of us also regret the adoption of the dual mandate in lieu of a strict focus on monetary stability. The Fed's own website acknowledges that maximum employment is driven mainly by non-monetary factors. And if we accept
I'm gonna look at some more profits on gold.
The Fed's mandate?
It's been a brilliant day.
Peter, as you know, we're created by Congress
on USD as well.
Congress assigns our goals,
so
and it has
looking in
assigned
about 90% of every single position.
It's my view.
I'm going to leave some runners,
the
but
mandate, has
Luis,
served
can
the
you just
public well and is
lower the
generally
volume,
workable.
please?
In particular, at the moment, I don't see the two goals as in conflict at all, because without price stability, we will not be able to achieve the kind of strong labor market that we want for a sustained period that benefits all.
Luis fell asleep.
We're moving to a single mandate, but that's
you can mute him.
Yeah, just mute him.
We will of course implement whatever mandate.
Do you guys want to continue listening in, or
it's true that, and we do say that.
Yeah, I'm muted, Luis.
Either way.
Yeah, I think Powell pretty much explained everything that I was expecting. So when we started the stream and during the morning briefing, I highlighted that Powell is going to reassure the market that rate hikes are coming. He did add a few interesting sentences, but mostly he was looking backwards. He explained about what caused the inflation, what will cause the stagnationary period, but actually it was Christine Lagarde who was brave enough to say that yes, we are going to enter into a stagflation period. Jay Powell was a little bit more conservative, but essentially he said what he had to say, that he reassured the markets that rate hikes are coming. He didn't say anything new, and I think that's why the market isn't dropping too much. So let's see if he's going to add some ending sentences, but who made some money today?
Yeah, made some, yeah.
Good. Philip, how is your challenge going?
Yeah, much better after today.
Good.
Same here.
There's only 3 people made money today?
No, same here. Recovered almost 80%, 5% from yesterday.
It's been a good day so far. Let's see if New York's session will carry magic.
Yeah, I'm not going to... Oh shit, it's already happening. Fuck, I wanted to leave.
Yeah, the day's getting better.
No, I didn't want to wait the New York Open. Alright, let's say a few minutes.
Bunch of addicts.
Really, sum up.
You know the feeling.
Yeah.
But Dow Jones is dropping hard.
Yeah.
Who's selling Dow Jones with me? US 30.
I am. I'm
selling.
You selling, Jill?
Already
Nice.
closed the Wisher Hunt.
Yes, Nasdaq as well.
Look at that.
Very nice. Very, very
Wow.
nice. Did you double your money with me?
I hope so.
So VM Badenhorst says that was scared that the speech will influence it. I closed the profit before the speech. Yes, it was a double-edged sword, because when Powell is speaking, is usually jumping in between sentences, especially when a journalist is asking about, okay, Jerome, tell us about the stock market, tell us about the labor market, tell us about your plans, whether you're going to slow down or speed up with the rate hikes. But today I had the feeling that he's going to stick to the plan, and he's going to give conservative answers, reassuring the markets that he's gonna go ahead with the rate hike. The blackout period is coming soon, so before the actual rate hike, official Fed members are not allowed to communicate or say anything to journalists, even though this year they leaked the 75 basis point to Wall Street Journal. Long story short, I was expecting that he's going to repeat what he said at Jackson Hole, but he was a little bit or slightly more conservative today, and I think because the stock market falls so much, it's not the interest of the Fed to crash the market. So midterm elections coming up, he was really cautious with the words, but let's see how the New York traders are going to react to Powell's speech.
Amash, you could have told me US 30 is going this low, bro.
Say it again.
I meant when I asked you how low do you think US 30 is going to go? You could have told me it's going this low.
Wow, how should I know? I don't have my crystal balls. I have balls, but they're not crystal.
I know.
But if you shine them enough, you know, just slowly, gently, it's going to be shiny as a crystal.
Tickle them, maybe they gave you an answer.
Yeah, definitely the genie is gonna come out.
I'm still holding for yesterday's low.
Yeah, it's going to hit 31,000. I wouldn't say 100% sure because we can never be sure, but I'm aiming for 31,000 and even lower.
Same. Got my TPs on 31,000.
Yeah, it's gonna, you know, if you look at, have you seen the chart that shows the 2008 financial crisis? The market is moving today exactly like it back in 2008, and we still have another 25% drop down to even lower. You see, it's gonna crash to 26,000. It's a bit extreme, but my opinion, 26,000 is coming soon. Shakila, you making popcorn? Alright, guys, I think my job is done for today. We made 600 pips just by listening into some old people speaking about economics. How awesome is that?
Yeah.
Perfetto.
After yesterday, I think we all deserve some money coming to the house. So it's a good day, but remember that the only easy day was yesterday. Tomorrow is going to be much tougher. So make sure you look in some profits. You need the bullets, especially if Philip is doing the challenge. So let's help Philip to pass his 100k challenge. It's not impossible. Don't leave too much money on the table. I wish everyone a relaxing evening. Tomorrow I think I'm gonna take a day off because, you know, we made 600 pips today. There's no reason why I should give back tomorrow. So team, I think I'm gonna have the morning briefing tomorrow with you. So see you tomorrow morning.
See you tomorrow morning. Thank you very much.
Right, and we are
Cheers.
5:30. We are 700 pips up.
Wow.
Wonderful.
Have a good day. Ciao.
It's amazing. Have a good
Thank
one.
you very
Cheers.
much. Take care, everyone.
Bye.
Yeah, 730 pips. 510. 650. Yeah, 730 pips just under one session. 730 pips. How many of you made 730 pips in a day? In an hour, or actually 2 hours? If you guys wish to join, want the same analysis every single day with morning briefings, live trading 3 times a week, or 4, maybe 2, you know, it's all varies, then you have the chance to go to my website, arthurfx.eu. I'm actually a trained economist, so that is my education. I used to work in banking and finance, at a hedge fund. I used to work in risk management. I used to work, you know, many companies, trading or not trading related, but in finance. So I'm in capital markets for a while. If you wish to join, there's 50% discount today. Enjoy, it's yours. Make sure you use it, you capitalize on it, take advantage of the 50% discount, and you can join if you go to the link, what I'm going to post into the chat. So I hopefully see you soon. I wish you everyone a good trading day. We made 700 pips just out of free trades. Make sure you lock in some, and see you next week, guys. This is the Alpha FX.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
The owner of the most popular bakery in town. Billy, how did you do it? How did you make all that dough?
Honestly, I used SEMrush to find the best keywords online, and the customers came flooding in.
Your business deserves to be seen online. Step into the spotlight with SEMrush.
Bakery in town. Billy, how did you do it? How did you make all that dough?
Honestly, I used SEMrush to find the best keywords online, and the customers came flooding in.
Your